Many investors are drawn to dividend stocks because they offer a regular flow of cash that doesn't depend on the market going up. What's more, chances are good that a company with a rich history of payouts will keep delivering its regular dividend. That makes monthly dividend stocks particularly appealing. These income investments offer distributions every 30 days instead of the more typical cycle of once per quarter. Here are top dividend stocks that offer good yields, strong operations, and monthly income. 1. PennantPark Floating Rate Capital. With a current yield of 8.99%. PennantPark is primarily a lender to subprime middle market companies, meaning companies with less than stellar credit ratings that must pay a higher rate on their loans to offset a higher risk profile. PFLT mitigates this risk for shareholders first by doing exhaustive research before issuing any debt, and then by focusing on a structure where it's the first lien debt, meaning it's first in line among creditors who want to get paid back in the event of bankruptcy. The icing on the cake is that its floating rate loans actually see interest rates change with the market. And seeing as rates have been rising recently, that means borrowers with this kind of loan are paying PFLT even more now than they were previously, even though their loan structure hasn't changed. Its shares are currently up more than 40% from pandemic times in 2020 year to date as a result of this interest rate trend. But the yield alone on PennantPark makes this monthly dividend payer worth a look regardless of short-term stock movement. 2. AG Investment Corp. With a current yield of 7.72%, AG is a real estate investment trust or REIT, meaning it can avoid certain corporate tax burdens simply by virtue of delivering 90% of taxable income back to shareholders. However, the company is not a property manager, but instead invests in residential mortgage, pass-through securities, and other mortgage-related investments. These investments are guaranteed by U.S. government-sponsored enterprises like Fannie Mae or Freddie Mac. While not totally free of risk, the involvement of the government is an important backstop to these residential loans and helps to provide a measure of certainty to AG shareholders. 3. Gladstone Investment Corp. With a current yield of 5.83%. Gladstone is a business development company or BDC. This class of publicly traded corporation is in fact run more like a private equity fund or a hedged fund than a traditional business. It makes investments in other firms through debt and equity stakes and then shares in the successes or struggles of those firms. Gladstone primarily focuses on lower middle market buyouts. In other words, these are companies small enough to be purchased fairly easily as they only have about $20 million to $100 million in revenue, but they are not so small also. One of its most prominent investments is Brunswick, a bowling products company with a great brand but an admittedly niche business. By picking and choosing investments like this, Gladstone can support reliable monthly dividends. 4. Prospect Capital Corp. With a current yield of 8.23%. Prospect Capital is a monthly dividend stock that invests in other businesses and then passes on a share of the profits to investors. And lately, its portfolio has shown a lot of potential according to Wall Street. The real appeal for dividend investors is the income potential of Prospect, which focuses mainly on private debt and private equity investments to companies that range from candle manufacturers and specialty finance firms to media and IT service providers. As these investments pay off across a well-diversified group of holdings, Prospect enjoys fairly consistent revenue and consistent monthly dividends with a tremendous yield. 5. Realty Income Corp. 5. Realty Income Corp. With a current yield of 3.99%. Perhaps the best-known monthly dividend stock, Realty Income bills itself as the monthly dividend company. This commercial real estate firm owns roughly 6,600 properties that are primarily occupied by big-name retailers, including Walgreens, Boots Alliance, and Dollar General Corp. Dividends have moved only fractionally higher in the last year or two, but that's a pretty good sign considering the pandemic-related disruptions that struck many commercial real estate firms. The company is quite proud of its track record of more than 620 consecutive monthly dividends as of this video, and investors can have confidence it will continue to build on that history going forward. 6. Main Street Capital. With a dividend yield of 5.8%. Main Street Capital is a best-in-class business development company based in Houston, Texas, that provides equity and debt capital to smaller and middle-market firms. The average size of a portfolio investment is just $13 million. These are companies that have outgrown their local bank or the U.S. Small Business Administration, SBA, but are nowhere near large enough to access Wall Street directly. They need a middleman like Main to step in and provide the capital they need to grow. Main Street has an interesting model in that it pays a relatively modest monthly dividend, but then tops up that payout twice per year with special dividends. This is a smart conservative strategy as it prevents Main from having to cut its regular payout when times get tough, like in 2020, which saw Main Street Capital pay out no special dividends. In the meanwhile, Main's regular monthly dividend still works out to a generous 5.8%. Thanks for watching till the end. Be sure to like, comment, and subscribe.